day, all. Ira Epstein of Linn Associates with your metals market update for what we're going to call Drone Thursday, and this is June 20th, 2019. It's late. It's 5:31 today. I didn't put out updates, as you know, last night for you. I had some eye surgery. You ever get a torn retina? It happened to me. I don't know how it happened, but they lasered it today, so I'm all welded here. So in looking at the markets, what went on? Well, obviously, seeing Iran shoot down a $123 million U.S. drone. By the way, that's what I saw in the news. These drones cost. They claimed that we invaded their airspace. The U.S. says it was international airspace. I don't know that that matters. What matters is we've gone now to another DEFCON level. Instead of just having ships there off the coast, if you will, of Iran, because the Strait of Hormuz is fairly narrow, and our ships aren't in the Strait of Hormuz. They'll be in bigger waters, so they don't put themselves in harm's way, these big aircraft carriers and the like. The problem all stems that we're getting escalation. And as the president said today, he thought it was somebody loose and stupid. I don't know that it was loose and stupid. It took all this to another level. And you never know what you're going to wake up to. So what happened was the gold market soared. Now, the other metals soared in large part, in my opinion, because of a change or a potential change in U.S. policy concerning interest rates. And as you know, yesterday, the Fed took out the word patient. The Fed is what we'll call on Fed watch. That's the term I like to use, because they can pull that trigger at any time to lower interest rates. The market this morning, if you go into the CME Fed watch page, had a 100% probability of a July cut in rates. And you realize when you get one cut, the Fed often stays on that path and cuts again, just like when it raises rates. So we're looking at a gold market that's scared of drones, the dollar falling on the news of U.S. interest rates, the dollar getting another boost because if the U.S. economy is weakening, what's happened to everybody else? So safe haven buying came roaring into the market. And you can see tonight we're backing off a little, but come on, this is a dramatic move that you had. The market wasn't up a little bit. You were up $48. If you read my gold report that I had out a while back, I took it off a week ago. I had the first count was 1356, then the 1365. I'm going by memory on this. So 1336, 1365, and then 1405. We're coming into what I call a third price count area. The trend clearly to the upside. Could this market go higher? Absolutely. I mean, you wake up in the morning and you find out the U.S. attacked something of Iran's. You think gold's going down on that news? I have my doubts about that. That doesn't mean it has to keep going up right here, because what if you don't get any more attacks? So that becomes the fear of the market. In terms of interest rates, once we had this crossover where the short-term average, the 18-day, got over the 100, and looking back at it, it wasn't a very bad signal, because the market has just soared since that has occurred. So interest rate boys that watch this, as I call them, you know, there's the flash crash boys or the flash traders and all that. Well, they were looking at this, I think. In terms of staying over the upper Bollinger Band, I'm not changing my opinion. When a market gets the first challenge of a Bollinger Band, like it just did today, I think traders take some money off the table. It's that simple. Doesn't mean I'm right, but that's what I think. That occurred at 1384 today. That was where the number is. And the market's right now in the 1392.60 level. The idea isn't to catch a top or a bottom. It's where traders that are trend traders often take something off the table. Does it always work? Absolutely not. You had sideways action here. That's a lot different pattern than this was, though. In the momentum, the slow stochastic, when I look at the momentum, tonight, both numbers, and I don't want to go by tonight. I'm going to go by coming into today. So on Thursday's trade, the market had both numbers over 80. On Wednesdays, it did not. It had it both, but the day before, Tuesday, it didn't. So I have a Tuesday, Wednesday that are not in sequence. Let me point it out again. Am I right on this? Remember, I just had eye operation. I have both over 80. This number wasn't over 80 Thursday's was. So you don't have an embedded reading. I have an overbought market that's hit an upper Bollinger Band. I'm sorry for being half blind here, but it'll take a day or two, they said, maybe longer for this to clear up. In terms of GLD, the momentum is different than it is in the futures. And I've said this along. This market's been staying in a bull pattern. It's there. I don't change my opinion. I think the pros took some money off the table at the upper Bollinger Band. When we come to GDX, if I take off, let me get back here and come back to it. That's how it'll work. This is where you were yesterday. I won't change my opinion that the first time you hit a Bollinger Band, the market often, that's where the pros take some money off. We've seen the gold miners. We've seen all the mining stocks actually taking off. But this relates to that. It's had an embedded reading. It's not a surprise it's moving, and it's leading the market up. That's a bullish sign for the metals. In the gold-silver ratio, this is the first time this ratio's fallen back to the 18-day average of closes since May. So it's had a heck of a nice run up here, maybe about 5 weeks or so, but it's not uncommon to get back there and spend a little time there. It doesn't mean that silver is going to materially gain on gold. It also is over the upper Bollinger Band in an overbought area. Now, if we come away from today's action, this is where you were on Wednesday. So I'm looking for resistance actually between the Bollinger Band and the 100-day average. Well, I got egg on my face. It went a lot through that, but now it's starting to pull back, and we'll see if now the fact that it got through the 100-day, does it fall back to it and use that as any support. In the copper market, this is hope that this week we will see some progress coming up. Next week is what I'm talking about, between Presidents Trump and Xi. So what the market did is it ended a bear leg when it took out this high on this day. That gave you, and I had mentioned this, you went to the Bollinger Band bottom, the next day to Bollinger Band top, and that's what I think you've done. You've ended a leg, and the market, while it's got an uptrend right now, it's immediately overbought, and your fear has to be that if there's nothing positive that comes out, watch out. Now, will the two presidents agree to not have their negotiators get together? That's not going to happen. The question is, do they make any progress? So I don't think you know too much right away. In the platinum market, you've got a lower low, higher high caught in the sideways Bollinger Band movement, no trend. And in the palladium, the fact that it was down today when the other markets were the way that it went, it's often a signal that it's run a course of this leg and it wants to pull back. That'll be known tomorrow if you lose the embedded reading. We'll see if the pros step in to buy anything or if they give up on that a bit. If they do, support's back at the 18 and the 100-day averages should the market want to do a big retracement. In the dollar index, you've gone from this swing to the upside all the way down today to 96.04.5. You haven't quite taken out a previous low. Wouldn't surprise me if you do. The market found support first, if we go back a little bit here, at the 18-day average, and if that gives ground, then the 100 becomes the next support. That's what it's respecting right now. I cover this in a lot more detail in the morning. I don't know if you've seen my morning subscriber video, but what I do is I review 40 futures markets and typically 4 or 5 ETFs for you each morning. And when I say morning, today I was recording at 5:30. Tape was probably out 6:15 or something. So I get up early, I watch what Asia's doing, Europe's doing, then you have a cup of coffee whenever you get to the tape. Remember, it's recorded, so it's not live. And I'm going to cover in this sequence these markets. The reason I do it in a sequence is you can jump around just either by moving your cursor, you'll see it lights up and tells you where you're at, or clicking on a sidebar lexicon that we've created for you. In these videos, unlike what I'm doing right now, I'm able to say buy here, sell there, put your stop right here, take profit at this number. Very specific. I'm able to give you technical information, fundamental information in a way I'm not allowed to do here, because this, at least, my morning video, what it is, it needs a user ID and a password. Yeah, there's a charge for it. I don't do everything for free. And the charge is 26.5 cents a day to see if it makes sense for you. After that, you can either subscribe for a year, $156, that's the whole thing, or you can take it at $15 for every 30 days. Your call. How do you find out about it? Go to our website, www.iraepstein.com. Go to education or research. There's a pull down menu to say morning subscriber video. Click on it, tells you all about it. You can also click here if you're watching me on YouTube. That'll take you right there. I'm Ira Epstein. You have a good day.